Second.
Hi, Mary Lou.
Hello. How's
Hello.
everybody? Hi.
How you doing? Great, huh?
Pardon me?
How are you?
Oh, I've been better.
Me too.
I'm sure. It's hoping to get some more information today. I'm going to do a quick little update as well. But I will start because I don't want to hold everybody else up. Good morning, everyone. I'm Mary Lou Halverson. I'm president of the Restaurant and Hospitality Association. And I want to welcome everyone to the first industry roundtable with Witham. We partner with Witham, and I want to thank them for their support, not just this year, but throughout since I've been with the organization. They're part of the association. They're a great partner. They're a great, industry partner. They've helped so many of our members. And I know today you're going to find huge benefit from this webinar and the ones that we will be doing once a month on the second Tuesday of every month. I ask that unless you're asking questions that you keep yourselves on mute. However, if you do have a question, type it in the Q&A and your question will be asked. We want this to be as interactive as possible. So, your questions will get answered in real time, and I know they'll go through more of that after. I'm just going to, before I introduce our panel, I'm just going to give you a quick update. I know there's a lot of questions out there, and unfortunately, I'm not going to have all your answers. Hopefully by the end of today, we will. As you know, yesterday, the governor made an announcement that starting Thursday, all restaurants, bars must close by 10 p.m. and not be able to open until 5 a.m. So I chuckled. I said, there's now going to be some real competition for the early bird special. So the senior citizens better watch out. That is where, and it's technically, it's not last call at 10. Your building should be empty at 10. When I pushed back on that a little bit, they were saying, it's local enforcement. And of course, if there's a couple people in there and they're paying their check, I don't think it's, the restaurant isn't going to turn into a pumpkin at 10 o'clock, but they do try and want everybody out of the building by 10 p.m. There is no bar seating will be permitted. That's not to say, and being this group that I know that everyone here is very creative. So a lot of people have been pushing high tops to the bar, and that's acceptable. It's just they don't want people sitting at the bars. You can reduce your 6 feet reduction between tables if you use a physical barrier like plexiglass. So this was really geared to help those smaller restaurants that had a smaller square footage that couldn't really reach the 25% capacity. So by putting that physical barrier up, you're able to not have to have that 6 feet distancing between the two tables. And lastly, and I don't know how many people are going to do this because they are quite expensive, but those igloos that you've seen pop up in Connecticut, New York City, those are now permitted. I know several restaurants have already have had them. So I think they weren't waiting for the permission. They just went ahead and did it. But now it is permissive. Again, we're working on pushing back on a few things and hoping to get some ease of some other restrictions included in here over the next couple days. So of course, be on the lookout, call the association. Shah, I think she knows every executive order inside and out, up, backwards, forwards. But we will continue hopefully to be a good resource for you. So I just wanted to take that minute and update you all. And I'd like to present our presenters, and who I've known actually prior to my days here at the Restaurant Association when I was at Jenkinson's. I've known these gentlemen. So I'd like to thank Glenn Bellamy. He's the partner, practicing leader, consumer products. I'm sorry, my dog just walked in. Terry Moncrief, he's a partner, team leader of food and beverage, restaurant and bars. Dan Mayo, principal lead, national leader of the federal tax policy, and Maureen DeSico, who is a partner with Witham. The team here today is going to be discussing the PPP loan forgiveness and managing cash flow in these challenging times. Again, ask your questions as they go through their presentation. And I just want to thank you all for being here, being part of the association. I know these are rough times. It sounds contrite or kind of trivial, but we will get through this together, and having partners like Witham makes it so much easier. So thank you. I will turn it over.
Thank you, Mary Lou. This is Terry. I'm Terry Moncrief. That's a great introduction. I appreciate it, Mary Lou, and I thank you and Shaw both, who did a great job of helping us set this process up. So the idea behind this is this restaurant roundtable. We've been kicking it around for a few years. It's the thought process is once a month we get together. We kind of have a couple subjects in mind that are current topics. This month being PPP, and then some cash flow around difficult cash flow periods. So timely topics. Try and do it once a month. Try and keep it very interactive. Hopefully, we'll get some feedback. We'll get some questions. We'll be willing and able to answer those. Like I said, I'm Terry Moncrief. I lead the food and beverage team at Witham. Glenn Bellamy works closely with me. He runs the whole niche. So between the two of us and the presenters we have today, we'll be able to answer any of your questions. It won't be an issue. Next month, just to give you a heads up before we get started, we're going to have again, second Tuesday of the month. I believe it's December 8th. We're going to get into some tax planning, which I think is going to be particularly important this year, particularly with this PPP money, whether or not a piece of that or most of it will be taxable. So it may end up causing a little bit of a tax situation, even though maybe we don't have a lot of that money left over. So that's going to be an important one. And in addition to that, we're probably going to also talk about what the tax laws might look like in the future with our turnover at the president level. We'll see. I'm sure it'll be interesting, and I'm sure there's a whole lot of ideas, and there's a whole lot of things that'll be discussed in the next month. So by early December, hopefully we'll have a good feel on that. And we'd like this to be as interactive as possible, so please use that chat box and type in any questions you have as we're going on. But to get started this month on the PPP, the SBA PPP loan forgiveness calculation, hopefully most of you have gotten the PPP. Hopefully most of you have already kind of seen the paperwork that's required to request the forgiveness. We're going to kind of walk through that process, and if you have any questions, we're going to hopefully be able to answer those for you and get you through that process. So let me introduce Dan Mayo. Dan is with our tax department. He's our PPP expert, and Dan's going to give the first part of our presentation. So Dan.
Great, thanks, Terry. So we'll thought I'd give a quick PPP update, then we can open it to questions. Many people have submitted applications already, a large number actually. Others haven't. They're waiting to see if the law changes, or they just haven't got the documentation ready yet. The SBA has come out, there's a couple new developments that have come out recently. One is that the district court in the District of Columbia issued a ruling last week that all loan amounts will be made public. So your company name and the loan amount will be published, no longer in ranges, right? Previously, they aggregated the names for people below 150,000. Above, they put them in buckets, so 1 to 2 million, 2 to 5 million, et cetera. Now they're going to release actual loan amounts according to this court case. It was a request made by news organizations, and the court granted the request. Also, for loans over 2 million, there's a new form being requested, 3509, which is goes to loan eligibility and whether the that key representation, the current economic conditions made the loan necessary to continue the ongoing operations. So that is going to be required to be filled out. That asks for a lot of information about both market activities, or how you were shut down, how your business was impacted, and also liquidity. They want to understand what the liquidity of your business was, and whether you're entitled to the loan in the first place. Because if you aren't entitled to the loan, we'll deny the forgiveness application. The other key development was for loans under 50,000. There's a new form, the 3508S, which is a simplified form. There's no numbers. It's just you make a series of representations that sort of you're intended to comply with the rules. They ignore FTE and wage reductions. So it's a very favorable thing for the smaller loans of 50,000 or less. What else can I tell you about the process? We're hearing that a lot of people, particularly when you move to a 24-week covered period, a lot of borrowers are relying solely on the payroll costs to get their loan forgiveness. And they're choosing not to include the utility expenses, the gas, electric, water bill, that kind of thing. It's just too difficult to collect the data, and the payroll exceeds the loan forgiveness amount. So if you're in that situation, we're finding, again, if it's simpler to do that, if you have some chunky rent payments, include the rent payments in there, because if it's easy to gather the data. So that's kind of what we're seeing with a lot of the applications. And also a reminder that the payroll reports from ADP and companies like that, payroll providers, are not always accurate. The FTE counts are not always correct, and sometimes they include earnings codes that are not income codes, or they don't include certain codes. So you really need to verify the accuracy of any reports you receive from a payroll provider or PEO. That's sort of where we're seeing a bunch of mistakes like that on applications that we're reviewing for clients. So with that, I guess I'll turn it over to any questions or any aspects of the PPP that people want to dig into deeper.
Hey, Dan, I just want to add one thing, if you don't mind. So you made a good point there that, the PPP loan has been made public. So over the last couple of days, I've received emails from restaurant clients in particular that got emails from third parties that almost seemed like it was coming from their bank about helping with the PPP loan process. So, and they're not from the bank, it's a third party. So just be very careful if you're getting emails, don't give any information out, make sure it's the emails from the bank. So I thought that was pretty kind of, sneaky of these third parties trying to obtain information. And you never know with security and stuff like that. So
Yeah, I would
careful.
say I'd say be careful. It could be some cyber attack as well.
Yeah.
So you need to be very careful.
Yep. So just keep that in mind.
Yeah, we did a test at Witham recently where they offered a free gift certificate to people. It was a phishing test, and unfortunately, many people responded to the free offer, and again, it was a test, and then those people were reminded that not to click links from unknown sources.
Mm-hmm.
So it could be that, right, as Jake and Glenn are mentioning.
Dan, we have a question. What was the name of the form for loans for 50K? Is that the 3508S?
Yeah, it's the 3508S. Let me see, I can open it and I'll put a link in the chat feature right now so people have it. Here we go. I'm putting
Now,
it in there.
just for me, do they have to do the 3508S and the 3509 or just one or the other?
No, so the 3508S is for loans of 50,000 or less. So
Okay.
only for those people. The 3509 is only for people whose loans are 2 million or more.
Oh,
And
okay.
then, and then again, though you don't have to submit that automatically, the lender will request it from the borrower. So, but unfortunately, there's a 10-day turnaround. So a lot of our clients are filling it out now and getting the data ready and reviewing it. So when they get that form, they'll be able to meet that 10-day turnaround.
Thank you.
Yep. So you see that I put that 38OS, the link in the chat if anybody wants it.
Dan, also with the restaurant group, I would say probably all of them would qualify for the EZ application, correct?
Yes, yeah. Anyone who's been severely impacted, like the restaurants, hotels, movie theaters, should qualify for the EZ because there's one of two representations you need to get in the EZ form, and your business hasn't returned to February 15th levels is the one that the restaurants rely on to use the EZ form.
Now, I have someone saying that their bank has informed them that the forgiveness application is not available yet. Is that true or no?
Yeah, we're hearing that from some clients who are telling us their lender is not available. I mean, you just have to wait and until they open up their portal. And so you can't apply if the bank's portal is not open. So it's unfortunate, but there are some banks and lenders that still have not opened their portal.
Okay. And how much time for the application? Do you know? Complete the application.
Well, to fill it out depends on the form, right? And how many employees you have. So I can't answer that question. That's very individualized. But I can tell you the banks, the way the timeline works, which I think the question might be going to, the banks have 60 days to process your application and submit a decision to the SBA. The SBA then has 90 days to consider your application, and it renders a decision back to the lender, and then the lender will tell you that final decision. So that you're looking at a maximum of 150-day process. We expect it to be a lot shorter than that, particularly for loans under $2 million.
And Dan, does the SBA have up to 7 years to, I guess, audit the books and records?
Yes, they have, I think, 6 years after you receive loan forgiveness or repay the loan. So it's about 7 years, as you mentioned, from today. So they can go back and audit you at any time. They do add, you are required to retain your records for that period of time. You know, the large loans over 2 million are probably going to get audited sooner. And the others, I assume, will be some kind of, you know, random audit, spot checking, that kind of thing, using statistical sampling to do a cross-section of loans.
Oh, we have another wonderful question here. What is the factor they use to determine if you are back to February 2020 levels for our restaurant? February is one of the slowest months, even at reduced capacity. October, November, December might generate higher gross sales than February. Is it based on prior year numbers? So October, November, December 2020 versus 2019?
Yeah, I mean, that's a good question. And unfortunately, there's not a lot of guidance on there. The only thing that's available is the instructions to the easy application. Do expand on it a little bit. And I'm going to cut and paste the key part here. So this is what the instructions say to the form. Let's see, did that work?
You should be able to share if you need to share your screen.
Oh, yeah, here we go. This is it. So it's the second part after the and here that says right after the and in all caps. The bar was unable to operate during the covered period at the same level of activity as before February 15th due to compliance with you know, government regulations, sanitation, social distancing, etc. So they're talking about before February 15th, so it's not a snapshot, right? They're not looking at exactly that date. There's not much more guidance in this, and it's it's a very general test, and it's not clear what they mean. Are they talking about your entire covered period, right? Or what if 2 weeks during your covered period you were shut down, but then you opened up and business picked back up again? That would seem to be covered, but it's not clear. They didn't say the bar was unable to operate during its entire covered period, right? So they could have said that, they didn't. So we take that to mean if part of your covered period you did not operate at levels. So if you were shut down, that would seem to be, right? That would apply to everyone here because there was a shutdown. You would seem to meet this representation because of the shutdown, even though it was you know, a temporary measure. I will put a link up. You know what? I'll copy the link too, so everybody has it, to the instructions to the easy form. There we go. You can see I'm very facile with these links. I go to the Treasury website numerous times a day.
That's like me with the governor's executive order, so I get it. Trust
Right,
me.
yeah. Occupational hazards.
Mhm. Okay, we don't have any current questions, so.
Dan, let me ask you something real quick. I have a few questions. I have a few clients that got that PPP necessity questionnaire. So that checklist sort of that goes through a dozen questions to decide, I guess, looking back in time, whether or not there was an economic necessity at the time that they asked for the PPP loan. Now, back on the day in the middle of March, or late or early April when they applied for it, certainly all of them thought there was going to be an economic necessity, but some of these clients ended up having more income for the period after COVID. And maybe, probably not most of the people on this call, but some of the people that maybe had a higher takeout business or a drive-through kind of business, maybe they did a slightly better business after COVID than before. So is this questionnaire, have you seen any of these kind of get filled out and submitted, and what kind of the purpose is on the other side? If at the time that you filed for the loan, you felt like there was an economic necessity, but later on it turned out that maybe there wasn't.
Yeah, so this is the biggest problem we have with this form, and I understand some of the business groups and the ICPA are going to put comments in on this very point. And so the point you're making is a good one, that when people made that representation, it was a snapshot they took on the day they filed their loan application. And as of that day, they said what they thought was going to be the impact. The fact that it turned out better or worse than expected is not a reason to say that they didn't make that representation in good faith. Because they really didn't know, right? We were facing an uncertain pandemic. Nobody had been through this before. And so the questionnaire sort of unfairly asks for information after the fact. And they're saying that, you know, what happens after the fact somehow affects the good faith certification as of the loan application date. And it's not really fair to look at that data because we didn't know, and nobody knew what was going to happen. Some businesses did better and some did worse. But at the time they made it, they all believed they would, you know, the loan was necessary.
Right. Do you think they're headed down a road where if you did do better after COVID, they're going to ask you to pay this loan back? I guess it will not be forgivable. Is that what they're headed towards?
I don't know. I mean, we don't know why they're doing this. I personally don't think they are. I think it's, I think they want to use this to sort of get a full picture of the borrower and then decide who they want to go after. That's my own personal sense, but I'm just speculating here. I don't think they would change the rules by issuing an information request, right? I think sort of the rules would have changed already. And I think that they would issue some kind of guidance explaining the standards they're going to use. So just by virtue of the fact that this is a questionnaire, my own sense is they're using it to gain a full picture of the borrower. They want to have that information so they can decide who to go after, who not to go after. Hopefully they're not going to use it for that purpose because it doesn't, you know, what happens to your business after you make that certification was unknown at the time you made it. And in some cases it was predictable, in some cases it wasn't. So I had a client, for example, who was a government services contractor. And most of their contract, all their contracts were with the federal government. Now, they expected no loss of revenue, and in fact, they had no loss of revenue. In fact, it went up in some cases. So in that case, it would not have been appropriate to make that certification, right? But with the restaurant industry, it's a different story. This is, you know, this affected that industry directly and harder than most other industries, and they were subject to shutdown orders, and they're still subject to significant limitations on their business. The fact that some were able to adapt and do better, it's not a punishment. It shouldn't be used as a punishment or a detriment against those restaurants who, and when they really didn't know at the time that they were going to be so successful and adapt. I mean, it was uncertain. I mean, I don't think anyone can say that there was certainty as to what was going to happen.
I have another question, Dan. I didn't pay utilities monthly because law wasn't unclear. Can I pay all the past due before the next billing cycle after my 24-week period and have them covered?
Unfortunately not. Yeah, if you paid it during the covered period, you can go back and pay all the months you missed. But you can only include payments that are made during the covered period in the loan forgiveness application.
Okay.
I see a question here too. There's a question in the chat. Is there another PPP loan coming? That's a good question. It depends on the stimulus talks. They don't seem to be going in a good direction. Again, I just saw yesterday that you know, Republican Mitch McConnell is suggesting that he wants another skinny stimulus bill. I didn't see the details of it, or I don't know that he offered any details on what that means, but they still can't seem to reach agreement. And we may have to wait until you know, the Democrats come into power in January to see if a larger stimulus can pass at that point. But there is talks of another PPP. It would be somewhat different in that it would be capped out, I think, at 200 or 300 employees, not 500. It would cap the loan amount at 2 million instead of 10 million. And rather than the current standard, you know, what was a loan necessary for ongoing operations, they use a like, I think it was 25 or 35% drop in revenue versus, you know, Q3 versus Q3 2019. So there's a more objective standard. They're trying to tighten it and limit it to smaller businesses. But that is widely expected to happen. Who knows, you know, with the vaccine coming out, the Republicans, Mitch McConnell particularly, use that as an excuse to say we don't need stimulus anymore. The vaccine is here, let's go with the skinny bill. But it's not clear what a skinny bill means, what it would be, and also whether the talks are ongoing between, you know, Pelosi and Mnuchin on the White House side.
Oh, okay. Okay, I'll accept that. I have another question here. When assessing whether or not an employee had a wage reduction in excess of 25%, are you excluding tips?
Yeah, so you look at the, well, you look at the base, the base wage, so which would exclude the tips. You look, when you, for purpose of the wage rule, it says you look at the base salary of the person, so you would exclude it in that case.
Thank you. Okay. I don't see any more in the chat at the moment.
Lana, we had a couple polling questions we were going to ask surrounding the PPP loan as well.
Yeah.
You think we can launch those now, which just to get a feel for what everybody on the call, the amount that they got, if they got, what they're
Terry,
anticipating.
did you tell people how to poll?
Alana, yeah, Alana.
Yeah, I'll explain. So this will be through menti.com. So I'm putting it right in the chat right now. So you go to menti.com and you'll type in this code.
Or open your browser. You can't do it when you're on here now, but on a browser on your phone or another computer if you have it.
Yep. And so the first question we're going to ask, I'll share my screen.
And once Menti opens, you have to put in the code. What is the code, Alana?
It's in the chat. So it's
772-8078. Open menti.com to 7 and then put in the code 7. I just lost it because you put up the screen. You shared your screen. Let's see.
It'll be on the screen. So 7728078.
Right.
So again, you go to menti.com and plug in this
And
code.
then just vote. There you go.
Oh, that's cool.
As everybody, there we go. We only have 2 answers, but others, if you feel free to answer, we can get a better representation.
Yeah, and these are confidential responses, obviously.
You also got to give them an extra minute. Some of them are on their phones and
Right.
not on a computer.
All right.
So they have to maneuver through.
All right, we'll give it another 30 seconds.
If we stay on our phone, Alana.
Are you there? Somebody there?
We're here.
Yes.
Okay, I'm Tom Engineeri, Cranberry Inn. It's not my computer that I'm using, so I don't know how to do what you want to do.
Well, if you have a phone, do you have an iPhone, a smartphone?
Hi,
Yeah.
Tom.
How you doing?
If you go in your browser and type in menti.com, menti.com, it'll open up to a page where you can put in the code that's on the top of this computer, 7728078, and then you could vote.
Okay,
Poll.
just hold on. And then I can tell you mine was less than, okay?
Mhm.
I'll go back off.
Tom owns one of the oldest restaurants in New Jersey, if not the oldest, just so you all know.
Yeah, it's a great place. I've been there.
All right, so Terry, you want me to close it out?
Hold on,
Just give a sec.
Okay.
just give it one more second.
Okay, I have someone, they said they submitted their answer, but it's still not processing.
How do they know it's not processing?
We can ask her.
Yeah.
It's a code at the top to put in.
Mary Jo?
Shoot. Okay, hold on.
Where is she?
This is certainly not
The
surprising.
code
to the
7788078.
There you go.
Hi.
So it's still asking me if something about it says please wait for the presenter to show the next slide, has a slide change and it's kind of bouncing. So did I submit my answer?
You probably submitted and
Yeah.
you're ready for the next one.
Yeah, that's
All
what
right, I'm ready.
Sorry, towards your loan.
Yeah, it's
Thank
left
you.
250.
Thank you, Mary Jo.
All right, so I'm gonna close it out, Terry.
Mhm.
Got it?
Yeah, this says the same thing. Wait for the presenter to show the next slide.
Okay.
Okay, stick with that.
You want to put up the next question, Alana?
Yep.
You know, any comments here about this? I mean, it was pretty much across the board.
Yeah, maybe we'll, after this question, we'll circle back and discuss both of them, Glenn, I guess.
Paul should be clear. How you doing?
Okay, so the next question is, what do you anticipate will be forgiven? So I'll give it about a minute. All right, you want me to close it out, Terry?
Yeah, I think we're all,
Okay.
that's not surprising as well.
All right, yeah.
So Dan, I don't know if you saw those responses for the forgiveness aspect to it. I would probably agree with that. So about 2/3 believe it will be fully forgiven. Another 1/3 believe it will be mostly forgiven. That's, I'll say what I've seen so far. I've gone through 5 or 6 clients working my way through this. Every single one of them has been 100% forgiven so far. Since we expanded to that 24-week measurement period, it feels like that really did put us in a situation where the majority of these will be the majority of the dollars forgiven.
Yeah, my experience is similar to that, Terry. I've, I talked to, I don't know, over 100 clients. I've reviewed probably 25 or more applications, and everyone's getting full forgiveness. Every single one that I've looked at so far.
That's good
I guess
news.
the point is, if they're not getting full forgiveness, maybe they should speak to somebody.
Right.
So
That's
those of
usually
you
what
who
they advise me.
plan to only get most of it forgiven, maybe we can help you, or somebody can help you get full forgiveness.
So I have a question. So some banks have the application ready and some don't?
Right, it's an online portal that the banks establish. So some are just slower in setting that up. Most should have it up and running at this point, though.
Well, I mean, the one person that asked, Santander's a pretty big bank, no?
Yes, yeah, Citigroup was slow too. They just came online very, very recently. So it's even the large banks are taking their time. I think they were waiting for a response from the SBA or the government to reduce the process altogether and make it simpler, which would eliminate the burden. So I think many of them are waiting for that in order to go online, but it hasn't happened. So other than the 3508S, that simplified form we talked about for under 50,000. So there was talk of simplifying it. They were hoping it would get easier. It hasn't. So they did make some changes. So banks only have to review, for example, they only have to review the expenses up to the amount of the loan. So if you had a loan of $1 million, you had expenses of $1.3 million, let's say, they only have to verify expenses up to $1 million. They can ignore the rest and then hit approve and send it to the SBA. So there were some changes on the lender side to make it easier to review and quicker to review the applications. They were hoping for more that didn't come, which is why some of them are slow.
Okay. Well, Wells Fargo as well? Okay. Okay. Someone said as of today, Wells Fargo's application is not up either. I know you're not the bank. I'm just.
Yeah, no, I can't remember. I can't keep track which are up and which are not, but it wouldn't surprise me. Even some of the large national banks are not up and running yet.
Okay.
That is interesting. It almost feels like the larger the bank, the slower they are in this process. Some of the smaller.
It's the case as well.
Yeah.
They're not as nimble.
Terry, where can everyone follow Dan? That's something we can share
Oh, yeah, Dan, can we follow you?
on the website? Maybe that's something that would be great for everyone to know.
On the website, yeah, I haven't adapted to Twitter or anything, but on the Witham website, you can click I guess we can, if someone has a link, you can sign up for our emails. We talk about the PPP and tax issues, and you can receive them through the Witham COVID website.
I'll put it in the chat, Dan.
Great, thanks.
We have another question, Dan. Have the FTE requirements for restaurants been amended to reflect that pre-COVID staff levels may not be needed based on current service volume /levels?
So no, there's been no specific FTE guidance on the for the restaurant industry or any industry for that matter. The only thing they've said, which again, the best thing is that easy application. And so if your business hasn't returned for some significant part of the covered period to the pre-February 15th levels, you can use the EZ form, which will make it easier because you won't need to calculate the FTE reductions. So the question, I guess, has been sort of answered through the easy application form, which addresses that, but there's been no specific guidance.
Okay.
And that's pretty significant, Dan, right? I mean, like I said before, I think most restaurant groups can apply for the easy or use the easy application for the process.
Yeah, Glenn and I have a client together that's well over $3 million alone, and they're using the easy form.
I have another, I think it's a question. Safe harbor due to PPPFA if business cannot return to normal operations.
I don't know what that acronym stands for. Does anyone know what PPPFA is?
Okay, Aaron, can you unmute yourself? Aaron?
Hi, can you hear me?
Yes.
Hi, this is Aaron Fraser from the National Restaurant Association. Great presentation, everyone. I just wanted to bring up the PPP Flexibility Act that was passed in May, thanks to restaurant efforts, and signed into law in June. The PPPFA gives a safe harbor for PPP loan forgiveness applicants if they were not able to sustain the same amount of FTEs due to OSHA regulations, CDC regulations, state closure orders, capacity restrictions, et cetera. So I would encourage everyone to look at the safe harbor provisions within the PPP loan forgiveness forms, because that allows for some folks to adjust their loan forgiveness amounts.
Yeah, thank you, Aaron. That's correct. On June 5th is when the president signed the PPP Flexibility Act. It did many things, including bring in some new FTE safe harbors, as you mentioned. It brought in the 24-week covered period as well. So it's a very important act for the PPP. But all of the guidance there is now incorporated, as you mentioned, in the instructions and in the forms themselves. So you don't need to separately, as you say, just looking at the forms, you'll see the information there about the broadened safe harbors. But the safe harbors, which you want to stress, are not even going to be important if you can get in that easy form. If you're in that easy form, you don't need to worry about the safe harbors.
Right.
Thank you for joining us, Aaron. I'm glad National gets my emails.
Thank you.
Okay.
I guess we'll say if anybody has any more questions PPP related, let's kind of get them in now, because we'll give that another minute or two, and then we're going to move on to the second half of our program, which is around cash flow and cash flow planning in a difficult, tight cash flow time. So we'll give another minute or two. Dan, you did an excellent job. Thank you, sir.
Thank you. Thank you.
Yes, thank you, Jan. You did. And this is a foreign language to me, and I get it now.
It was a foreign language to us all until March 27th, when they passed the CARES Act.
Yeah. Okay.
All right, I guess we're all PPP'd out. Alan, did you have a question? No? Okay.
Terry, we refer to that as PPP fatigue.
Oh, wait. I may have mentioned already. I apologize. Is there any benefit to waiting to apply for forgiveness?
So that's a good question. We get that a lot. At this point, there's no longer a benefit to waiting. There was a time when we thought the rules were going to get simpler for certain smaller loans. That has happened for the loans under 50. Congress, there was some thought that Congress would simplify the process for loans under 150. They haven't done that. The latest, the stimulus, again, discussions are stalled. There's no reason at this point to wait. There's also no reason to rush. So, you know, it's whenever you get around to it, hopefully sooner rather than later. But we are hearing some people, and we don't agree with this, but waiting to file the application in 2021 will not affect the taxability. Either way, the deductions are denied in 2020, even if you wait until apply until 2021. So you keep that in mind. The taxability will happen in 2020, not in 2021.
Dan, now he's bumming us out with taxability talk.
Right.
All right, thank you very much, Dan. We're going to move on now. Alana, I believe we had an operational polling question.
Yep, I'll share my screen. Yeah, same thing here. Just make sure to log on to Menti and you'll type food in. Okay, so have you continued your outdoor dining?
They have had no choice, unfortunately, but we can ask them. Yeah. No. That breaks my heart.
Okay, we'll give another 30 seconds.
Only partly kidding when I put the snowfall word in there, but it may come to that.
Terry?
Shovel me a path. I'll go to a 10 if it's gonna.
Let's not ask for that.
All right, so I'm going to close it out, Terry.
Yeah, that
Okay.
sounds good.
All right.
So we had basically a couple other questions. I don't think we got them into polling questions, but I guess I'll ask them now, and maybe you can throw up in the chat box. We were just kind of wondering what your indoor capacity looks like now, what your outdoor capacity was, and what you think your total capacity now going through the winter might be. I do agree that if possible, you get some of those heaters and you kind of keep that outdoor going as long as possible. But once that does close down, it's going to be awkward. Unfortunately, it doesn't sound like we're going to get to 50% or kind of full capacity as long as we keep 6 feet with this second wave that they're telling us is hitting now. So kind of just wondering, maybe you could throw it up in the chat.
So if anybody wants to unmute themselves, they feel free to speak up. We'd love to hear the conversation.
Yes.
So I will hit unmute all. And now they can individually unmute themselves.
You have to unmute them and they have to unmute them? Is that how that
works?
No, everybody's unmuted.
Yeah, I unmuted them.
Gotcha. Okay. All right, we're going to, we do have some polling questions around the cash flow as well. So Maureen, I'll introduce Maureen to you. She's going to be our second presenter. Maureen is one of my partners down in Orlando. She wrote a great article on cash flow and cash flow planning. So I wanted her to kind of jump onto this conversation and help us out with some maybe tips and tricks and how to get through a tight cash flow time. Maureen, I guess I'll ask you, I know we have some polling questions surrounding your part of the presentation. Do you want us to start out with those or do you want to get started and then we'll mix those?
I think that's a great idea because I think it shares information with the group and then it might lend to the dialogue. So I'm all for putting up a polling.
All right, so why don't we do that, Alana? Let's start with the polling.
Okay, so that one's launched. Do you have an operating line of credit? So same thing, go to menti.com. Here's the code.
Yes, if you have none, you wouldn't be able to answer that one.
Less than 50?
Yes, it would fall under less than 50, none.
Is 0 less than 50, Jake? Come on.
How about this? How about if you have none, don't answer?
Well, that could be half the crowd, though.
Well, that's okay. We'll get the count, right, Alana?
We'll just get the percentage.
Oh, we won't get the number that comprise it? Okay.
So I'll
Well,
give it another,
we do the number of people who answer in the bottom right corner.
oh, yeah.
So you do, okay. Consider a line of credit, even a personal line of credit. Doesn't have to be, it could be other sources of lines of credit. It doesn't have to be a bank.
My uncle cannot.
Yeah, like consider liquidity, right? You know, we all look at that in many different ways, depending on how large or small. So think of it in terms of available cash, whether it's personal, whether it's bank, whether it's a family member. Try to broaden your thinking.
All right. You want me to go to the next one, Maureen?
Sure.
So do you have cash flow issues due to seasonal fluctuation in sales?
Now, this is a tricky question. So think in terms of you adjust based on seasonal activity. So it's more a question of if you don't adjust properly, you may have more cash flow
Busy
issues.
summer, slow winter.
Busy summer, slow winter.
Got it.
Yeah. So cash flow, more management, not necessarily an issue per se, but it's definitely going to be harder for you if you're busier in the summer, slower in the winter. Okay.
All right, I'll close it out, Maureen.
Yeah, that's great. Thanks. And just to give you all, and I'm very happy to come and speak with you. Can you guys hear me okay?
I can, Maureen, yes.
Okay. I'm just really happy to be able to speak to the group today. I am a really big supporter of ordering out, eating out. I've been out the entire year. I want you all to know. I've been in New Jersey. I've been in Orlando. I've traveled, and I am just promoting the restaurants and anything I can do to help you all by word of mouth and just supporting family and friends in the restaurant industry and all of you. So I hope this is going to smooth out over time, and I do commend you all for all of what you're doing. I am very impressed when I go to the restaurants to see all of the ways operationally you've all been flexing what you do to be able to accommodate, making it also still a wonderful experience to go out and eat. So thank you. With all that said, I know that cash flow management is regular and ongoing for all of you. You do it either daily or weekly. What we're trying to promote is, you know, both addressing it on a formal level and on an informal level. Formalizing things in the accounting world is something we try to promote, because when you take a really formal approach to something, it does reveal things that you really didn't consider along the way that you would do in an informal way by just operating your restaurants, operating your businesses in various ways. So if you can put pen to paper and just kind of come up with a more formalized approach to doing your cash and liquidity forecasting, I think you may find that there are some areas that you can refine, can improve. But my background is mostly advisory and internal audit and operational. So I always really like to suggest that, you know, the realistic approach to anything is being hands-on, right? So the walkthroughs, the daily observing of what's happening, really engaging with your employees and the operations that are going on to serve your customers is going to shed light on things the most. And you need to try to take some of that and build it into an actual forecast. And that's not easy to do, but I'm hoping with these kind of roundtables that you can all share how you go about that. So for instance, if you create just even a three-prong approach, you know, what is a basic model, a moderate type model with some contingencies and issues that you're trying to address that you're seeing, and something that's maybe completely, you know, like sort of a maximum model of, you know, what you think could go wrong. You know, extend yourself into thinking, if all of these things didn't work well, how would I react to it? So that you have sort of three ways of measuring how to make decisions. The building in of the contingencies is hard because nobody likes to think about what can go wrong. The biggest problem you're all confronted with, I assume, just from being familiar, is staffing and traffic, right? So you need to balance payroll and service and your inventory. And it's very complex at times. So I've seen many change menu, add to the menus, things that have longer shelf lives, things like that. We like as accountants to think promotionally. So if you can promote your business and save money through social media, that's a really tremendous pickup for you in terms of saving costs and also maybe driving traffic. So if you haven't spent a lot of time, now that we're going out pretty far here, it's time to really regroup on that and maybe even engage your employees. We do volunteer a lot on boards, and what we're seeing is that people even volunteer to help on the social media side. So you may be surprised. You can get some help there that you wouldn't ordinarily know is available just from engaging your staff and your families. But I do want you to know that the banks are very important. They're working with people. Try to talk to new banks, try to talk to new advisors, look at your insurance, build that into your cash forecasting, saving on premiums, saving on interest, trying to consider whether or not to delve into the personal areas of extending yourself is very tricky. You definitely need to do tax planning around personal guarantees, how to protect other assets in your life and in your business is very important before you extend yourself on the personal side. And if there's any opportunities to do any planning for gifting, this is a good time to be thinking about that, especially before year end. Now, these are just some highlights. I know that, we're open to questions and I don't want to belabor it by talking the whole time. So I do want to say the goal would be to have 6 months of available cash, but I would love to hear from all of you. Is that something that you're toying with, or are you really just going week to week, month to month now? Are you feeling comfortable that you can forecast out and maybe have cash available for longer, 3 to 6 months even? I'd love to hear the chat on that. And then maybe we can run another polling question.
You want them to just answer that?
Yeah,
or?
yeah. Everybody just throw a chat out there. Like, are you managing weekly with your cash? Are you tapping lines and available
It's open.
credit, very regularly, or do you feel that you have cushion for a few months? I'd be curious to see in the chat. And if anybody wants to share things that are working on cash management, for purposes of this discussion, it's a lot of understanding what you're experiencing that will help us the most. But we're here to help you, to give you ideas. I think that, staying tight on payroll and managing your workforce, maybe are you cutting it on a regular basis? Are you managing part-time employees heavily because, to manage your cash? Are you incentivizing people to stay on longer? I'm sort of opening it up a little to see if we can get some chatting going on.
Yeah, I'd be willing to go first on that. Can everybody hear me?
Yeah.
Yes, we can.
Okay. Again, I've owned the inn for 28 years. The inn goes back to 1750, so it's never had a bad time, but this has now been very serious. What I've been doing is reading all this about cash flow and everything, but people are missing the point. We keep talking about the expense side of it. It's really the sales side. We're about 65% banquets, so I don't have to tell you what's happened.
Right.
And we were well positioned this year to do a great year. We had a good year last year, and then January and February were outrageous for us. And don't ask me why, but we were really taking off, as I call it. And then along comes March 17. Now, you talk about, do you have enough funds to get ready? Well, we had a PPP loan, which thank God, but when that loan was provided, it was basically you were to use it by August. And in the beginning, and then they said, they extended it on. Now they have a forgiveness program. They've gone very well. Well, our cash on hand at that time was probably good for about 6 months, very good. And we didn't see any problem. When it started, we were going to be finished by April 15th to the end of April. They would probably open it up again. Never happened. July came, never happened. And then they had outdoor dining, but we're not that type of place. We just don't exude that. You know, we looked into it. We had tables out. We had all of that, but I don't know how many people like Villasabuco sitting at a table like that. You know, so it was something where we had to change. We went to takeout. That's been okay, but it's not successful. So my revenue stream is really my cash flow problem.
Right.
I've cut all expenses. You know, I've got a good background in business. I know what to do. I've never had a problem ever. Never missed a payroll. Never had a problem with the bank. Nothing. And this came along, and it just totally takes me like all of my knowledge. What the hell do you do? The bank has been good so far about extending the loan that I have. You know, you don't want to go with PSE&G. I thought, you know, we postponed that for a couple of months. Everything that winds up to be the worst thing to do. So we just paid the bill off and said,
Right.
forget. So all I'm trying to bring up to everybody is there's two sides to the equation. One is doing your cash. I think we've done it, but we have to have certain things. I have to have the promotion, for example, for weddings. If I do without that, we're booking now for next year, but that's next year. Right now, the concern is this year. We're about, I'd say our sales at this point are probably about cumulatively probably less than 20% of where we should, that's less than 20%, period. And our sales are probably in the same situation, you know?
Yeah, Thomas, I actually like what you're saying, and I agree wholeheartedly that this is this truly is a dilemma. And I think what we need as a group in these sessions would be to share, you know, how to drive business, you know, top line business through maybe some extremely concentrated planned promotional approaches, and how to do that with even collaboration locally. You know, I'm from East Windsor, Cranberry area. I've spent most of my life actually going to events at the inn. And so I know exactly what you're saying, and that hits you really hard. Anybody that holds a lot of events. It's, you know, is there a way to come up with some shared promotional approaches? You know, even when it comes to delivery or, you know, curbside pickups, if you can elaborate in some way with your following to give them information upon those even pickups, you know, whether it's flyers, you know, through social media, through, you know, just, you know, welcoming them in upon a pickup for like some kind of a tasting that is well controlled, you know, just ways. You got to think out of the box now, because this is going to be another 6 months or more that we're challenged with to get through the winter. So I would love this group to actually focus in on that and share ways that they're going about it. I think corporate promotions would be great, like working with your local companies, your large corporate environments, and, you know, even our accounting and auditing firms. We're out there, we're at the office, we're at clients, you know, there's certain industries that continue because we're compliance oriented that you can cater to. It's just something to think about and talk about. I would love to hear from more people. I think that, you know, this is more, you know, not something we can solve for you, but as advisors, we can help you think through. But do challenge all the costs. And Tom, you're saying that you've challenged them. I'm sure you all have, but don't minimize the aggregation of reducing a variety of costs, so that it can add up if you really take a hard look. Like, do the operational walkthroughs, challenge your employees to come speak to you about things, incentivize them to come up with recommendations to you. You know, there's a multi-directional approach here. I don't know if there's a way to gather that information easily on your end. How have your employees been reacting to this?
Excuse me?
How have the employees been reacting to all of this? Are they stepping up in ways?
No, my employees have been very supportive. They understand they seem to understand our business. So I have found them to be extremely supportive. And you know, they're going through rough times now themselves. But, you know, like, for example, we have Thanksgiving coming up, and we're probably going to do about maybe 30% of what we would normally do. And one thing I'll just give to you from my knowledge, we used to have tables of 15, 18, 20, 12, 14. This year, and then we had the 2s and the 4s, but they were always the minor portion. This year, we're all 2s and 4s, and a couple of 6s, a few 8s, a 9. And it's not surprising, but it just shows where everyone's head is right now. They're still very concerned about going out and the dangers of it. You know, we have our place sprayed every week. We do all the right things. And that's the only other, I don't want to digress from what you're trying to get across, but the other thing is that with the staff and the sale and all of that, it's very difficult. It's very difficult for us to handle, you know, handle that balance, you might say. But we've been doing it, and the good part is we have, you know, I think a loyal staff. So that's been the positive side.
It sounds like from the polling that a lot of people feel that staying open outdoors is going to be very key here. So driving, you know, promotions towards, you know, letting people know and promoting just the fact that you're open, even not promoting anything, you know, like discounts.
Yeah, but there's a lot of fear. The problem is there's a lot of fear that's been put to the fact of indoors versus outdoors, and it's better. We've gone to a few places, and you know, they're sitting there with tables all squunched under a tent.
Yeah.
You don't say anything. That's what they do. But I'm sitting here going, I really don't see the advantages of this. And then they're out there in the cold right now, and they'll stay out there when I know inside we've done everything. We have more than 6 feet because we have a large place. So we have more than 6 feet. We've taken care of all the situations. We clean, we do this and everything. But now it's the perception. I think what something needs to be done is to find out more about outdoor versus indoor.
That's a really good point. Listen,
Yeah,
dispelling negative perception is so important because people are worried about being indoors. And one thing I think we even tried to push out some articles early on about, you know, putting it out there on your websites, how you're cleaning, how you're addressing these types of things, because you need to make people comfortable. And that's a hard thing to sell during this time.
No, that's it. And so I would say that's something that everybody should work on, is find out, is that really the right thing to do, is have everybody outside under a tent with closed sides.
Well,
that's what you notice now. Everybody's got their tents closed.
However, unfortunately, at this time, outdoor dining has a larger capacity here in New Jersey.
Right.
And people are taking the opportunity to use their indoor and outdoor capacity to increase their revenue. Ideally, a restaurateur would prefer to have everything inside as the weather gets colder. But at this time, it's 25%. It's capped at 25%. Now they have to close their bars this coming Thursday. No one can sit at the bar. So that's even less capacity available to a customer. The good thing is now they can put in the plexiglass barriers. We don't know the details of that, but hopefully it'll come sometime today. But that's the only reason why a lot of these restaurateurs are outdoors.
Yeah. One thing I want to highlight about, and I know we're tight on time at this point, but one thing to highlight about even delivery is, you know, it's to partner on delivery is a big cost. So you really need to look at the comparison between using the services that are available out there, you know, DoorDash and Uber Eats, et cetera, versus maybe even having your own delivery. But then you have to consider insurance impact to you as, you know, liability and the cost of such. So, but it is worth looking at extending or expanding and doing a much better job of curbside pickup and how that feels to people. I've been doing curbside pickup for, you know, since the beginning of this. And I can say, if my experience, and I'm just speaking personally, if it's a good curbside pickup experience, I go back regularly. So I think that if you're all not getting input from your customers, it's a really good place to ask, what would make this nicer for you or better for you? How to save money on that end is up to you. Do they really need cutlery? Do they really need, you know, certain things about the packaging that maybe you could cut costs on? But really, it's the experience you're selling, right? And the experience is so different right now. So I have to always put my operational hat on, but it's an emotional thing for not only you, but your customers. So if you can make it a good emotional experience, even changing the slightest thing could change that whole trajectory for you on your sales side.
Brian, sorry to cut you off right there, but we are, just to be respectful of people's time,
Absolutely.
we need to kind of bring this to a conclusion sometime soon. We're 5 minutes long, and I apologize for running long. Maureen, I think I'm going to ask you to maybe come back next month. I hate to do it to you, but it
Happy
seems
to,
we're
anytime.
halfway through your conversation, so probably there will be a month that will get you back onto this. I thank everybody for joining us. I think it was certainly a great event, and I hope to have many more of them. I want to remind you, our next event, our next restaurant roundtable will be December 8th, and we're going to talk about income tax planning, as well as what we think the new tax laws or the new tax situation for 2021 and going forward might look like. So some tax planning for 2020 and then some real long-term planning for the future. So please join us December 8th, again, second Tuesday of every month. Maureen, I may very well have you back as well, but I thank you all for joining us and I really appreciate it. So
Thank you, everyone. Good
Thank
luck to you all.
Thanks.
Thank you all.
Thanks, Thomas.